One of my next guests is looking at names like NVIDIA and AMD, but not yet putting cash to work here. Joining me now is Vance Howard. He's the CEO and portfolio manager at Howard Capital Management. We're also joined by Peter Boockvar, the chief investment officer at Bleakley Advisory Group and a CNBC contributor. Welcome to you both. Peter, let me just start big picture with you for a moment here. The knee-jerk assumption is that there's no way the Fed can be as hawkish as they were previously going to be, but we see a lot of things moving in a way that they would not welcome right now. Oil spiking, mortgage rates are falling, real yields are plunging. All of this could make the inflationary problems worse down the road.
It's actually a step further. It's a stagflationary environment that no one on the Fed has any experience with. You know, if only Paul Volcker was still alive, he can give some lessons to the current Fed on how to manage this. I think the Fed, it's very easy to try to predict what they're going to do the rest of the year. I think the Fed is going to take it meeting by meeting in the sense that they'll hike in March, they'll hike in May, they'll talk about shrinking the balance sheet, but then they're going to have to make a decision about, are they going to focus on the stag part, the slowdown in the economy as a result of much higher prices, or are they going to focus on the inflation part and continue to tighten, with that being a priority, stable prices bringing down the rate of inflation. And their history, the current Fed, is to focus more on the stag side. And that's why but that risks accelerating the inflation side if they're not serious about dealing with it. Exactly.
And we know, obviously, if there's an absolute crisis, that totally changes the picture. We're just talking about what we know for now. Vance, you have proprietary gauges of market strength, let's call it. They're still not flashing a buy signal to you, are they?
No, they're not at all. I'd be very, very cautious. The HCM byline went negative on January the 19th. We started raising cash. Out of the $5 billion that I trade, I'm about 1.6, 1.7 billion in cash right now. We won't go long anything until the HCM byline goes positive again. I mean, we've got our buy list out. We're optimistic, but I'm not going to fight the trend. We've never fought the trend. In 2008, we virtually sat it out 100% in cash. We were down 1.68. Go do something entertaining other than lose money in a bad trending market. But this market's negative. It doesn't look too very good to us. And sitting on a lot of cash feels pretty good right now. By the way, if you're not sitting on a lot of cash right now, you don't have the ability to participate in all these opportunities that are creating themselves. There's going to be wonderful buys when this thing turns around.
Well, just real quick to that point, I mean, the difference between now and '08 is that inflation's a lot higher. So I know you're not really concerned about losing 3% of your purchasing power in a 3-month period when you could lose 20% of your capital. But at some point, if you stay out of the market too long, does that become a bigger problem?
Well, like I said, if you're fighting the trend, I'd rather, sit on cash where maybe inflation's eating up a little bit of my cash than watch my stocks drop 20%. I figure it's easier for me to come back in when you got stuff like Salesforce that's really selling off. If it had a 30, 35, 40% run, be back to even, that's a whole lot better than losing money right now. So let the market reset. Sit on your hands a little bit. Sitting in cash for 2, 3, 4 months until the trend changes back up. It's just prudent. Take the emotion out of all this. Look at all these negative news coming in. I can't control anything. I don't know where the market's going to go next week or next year. What I do know is we sit here right now, the trend's down, and you're creating a situation with a lot of stress and pain if you're buying into it.
Peter, what would you tell people as we head into the State of the Union tonight, where Biden will outline some anti-inflation plans, the Powell appearance tomorrow, where the big question is whether he'll kind of allude to backing off to be safe or not?
Well, I don't expect any moves by the administration to have any impact on inflation at all. I think people think that Powell is just going to lay out his plans for the next year, and he's just not going to do that. Now, he's in obviously the difficult spot because of what's going on with Russia. But I think if I were him, he would say, okay, I'm going to hike in March. I'll hike maybe in May. I'll talk about shrinking the balance sheet, but I'm not going to commit to anything more than that. It'll be a play it by ear monetary policy because he doesn't need to say anything more. There's a lot of time between the March and May meeting, and there'll be a lot of time between the May and the June meeting. So he doesn't need to pre-commit so much that far into the future.